Hey there, I'm diving into the fascinating world of currency markets and the US dollar's recent performance. You won't believe what's happening behind the scenes. So, the US dollar is in a curious spot as we approach the FOMC decision. It's like a runner who's been sprinting ahead but is now feeling a bit winded. BNY's Geoff highlights this unique situation. The dollar has been on a roll with strong demand, but its positioning is getting a bit stretched, like an overstretched rubber band. What does this mean? Well, the dollar's recent surge was fueled by cross-border buying and late July spot demand. Think of it as a wave of international investors jumping on the dollar train. But now, we are seeing some signs of fatigue. Month-end rebalancing, light hedge ratios, and softer cash demand are like speed bumps on the road to further gains. Personally, I find this dynamic intriguing. It's like the market is saying, hey, we've gone too far too fast. It's a classic case of a market correction, but in the currency world. What many people don't realize is that these positioning adjustments are crucial for the dollar's long-term health. If the dollar keeps rising without these checks and balances, it could lead to an unsustainable bubble. Now, here's the kicker. According to you, only a hawkish Fed surprise can reignite broad USD buying. Imagine the Fed coming out with a super hawkish statement, like a surprise interest rate hike. That's the kind of shock the market needs to get the dollar rally going again. But is it likely? Well, that's the million-dollar question. In my opinion, the Fed has a delicate balancing act to perform. They need to signal a commitment to fighting inflation without spooking the markets. A hawkish surprise might be a bit too much, given the dollar's stretched positioning. What this really suggests is that the market is already pricing in a lot of hawkishness, and it's going to take something extraordinary to push the dollar higher. One detail I find fascinating is the comparison with the euro. Even a notably hawkish central bank may struggle to support its currency when positioning is stretched. It's like a warning sign for the Federal. If they go too hawkish, they might face a similar situation. This raises a deeper question about the limits of central bank influence on currency markets. As we approach the FOMC decision, the dollar's fate hangs in the balance. Will the Fed surprise us with a hawkish twist? Or will the market's positioning adjustments keep the dollar in check? Stay tuned, because this story has more twists and turns than a thriller movie. I'll be here, analyzing and interpreting every move. See you on the other side of the FOMC decision.